and not just blockchain, but also cryptocurrency as a payment or as an investment on their balance sheet?
Yeah, honestly, those are two different discussions. And it's
Hmm.
hilarious you asked me this today because literally my colleagues in the US put out a Deloitte point of view on this exact question today.
Hmm.
So I'm going to have to send that over to actually, you know what? I just posted it. I can't remember. I saw you liked something of mine today. I don't remember if
Yeah,
it was that
yeah.
one.
I had a quick look at it, and it's very interesting. I haven't even started the reading the first page yet. I just
Yeah.
had a look at the headline and the introduction.
Yeah, no worries. So actually a good thing about that is it goes through, do you want to use crypto in your business or do you just want to accept it as a form of payment?
Hmm.
And to take people through those two paths. And the two questions that clients seem to be asking me the most about these days is, well, I want to probably hold Bitcoin as a treasury asset because, you know, massive printing of money happening right now with COVID and massive inflationary pressures that we're all seeing in the price of food, lumber, et cetera, right? So people are, you know, and really strong treasurers are saying, well, what other way can I, you know, secure my company's balance sheet and have fiscal prudence? So people are looking at things like Bitcoin. So just holding it versus actually transacting in it are honestly two fairly different questions. I mean, no matter what, you need to really have good key management policies, and people need to understand a bit how cryptographic keys work, and you're going to need to have best practices for how you're using them. So you know, you can try things like sharding. You need to have multiple people with redundancies to make sure that, you know, you don't have something like a quadriga situation where someone quote dies and then no one can get access to anything. So there's a little bit of a kind of growing up that needs to happen around saying, okay, this is my new safety deposit box that I'm going to store my cash in, but who has the keys? It's just not a physical key. How many people have access to it, and how do I track access to that key? Um, so there's all kinds of things that people need to think of like that. That applies to both if you're going to just accept payment in crypto or if you want to hold it on your balance sheet. Because then all of a
Yeah,
sudden you got to learn about wallets and you
yeah.
got to learn about cold storage versus hot, you know, a hot wallet.
Hmm.
So, I mean, definitely crash course. Well, don't even do a crash course. You need to do probably a pretty good course if you're wanting to hold something like
Yeah,
Bitcoin, because companies are subject to phishing scams all the time.
of course.
And you don't think someone would go after you as soon as they know that you hold Bitcoin on your balance sheet with where the
Yeah,
costs are at right now.
yeah.
So your cybersecurity better be top notch, you know. So it's really learning how to protect a new type of asset once you decide that you're going to carry cryptocurrency and hold it or accept it from a client. So let's say you
Yeah.
want clients to pay you in crypto, or you want to give that as an option. So, for example, I on the board, and I started the Canadian Blockchain Association for women with a few other women in the space, and we have an event that we're going to put on pretty soon here. And our big discussion was, well, obviously we're CBA, like we're going to accept sponsorships in crypto because
Hmm.
part of our mission is to have women be more involved in this space. And so we absolutely need to have a way of doing this. We're not for profit, we're volunteer. Like we have one bank. So for us, even though we all know what we're doing in this space, we're still like, well, who should have access to our wallet? What kind of wallet should we have? What kind of cold storage should we have? You know, where is it just the four of us who split up the key? Do we have any, you know, risks where one of us could like decide to become a bad person and want to steal it all?
Yeah.
Do we, and then even when we accept the crypto, let's say someone pays us in Bitcoin, which would be great, um, the price is going to go up. So you actually have to decide when and for how long do I want to hold the Bitcoin versus transfer it to fiat, or do I want to keep holding it and then do I want to use it as like a treasury asset with which I want to say secure a loan against because it has a
Hmm.
value.
Yeah.
So all those kinds of considerations that may not have been there before, because normally you just it's
Hmm.
cash. You don't really gotta think what you're doing with it. But I think it really brings in a new
For
angle.
sure.
And then there's all kinds of weird stuff that's going to happen from an accounting and tax point of view. So those are really
Yeah,
critical for people to understand.
definitely. You can choose to have a hot wallet or cold wallet, and but if what if newcomers or newbies, let's call them, or companies that want to start adopting Bitcoin payments or storing Bitcoin on their balance sheet, but they haven't done it before? Platforms like Coinbase and Gemini are good places
Yep.
to start, right? And
Yep.
then, but it also depends what you want to end up doing with the Bitcoin and whether you want to store it for a long time or do you want to keep it liquid instantly
Exactly.
via an exchange.
Yep.
And most of the time, it's better to just start off with those institutional grade solutions
For
that
sure.
have proper security background and proper auditing and insurance
And that's
than to
part of
do
the
it
discussion.
yourself.
Yeah. Do you want a custodian or not? And you have
Yeah.
to really think, like you said, think about what you're going to be using it for. So one of the things with all these institutional custodians is it's great. So you can kind of think of it. Well, some people might not like this thought, but this is what's
Mm-hmm.
happening. It's a new set of banks. It's a parallel financial system, and you now have deposit custodians similar to your bank.
Yeah.
Now, you actually need to understand though, do you own the crypto anymore? Are you
Mm-hmm.
insured for losses? You have to
Mm-hmm.
understand all these kinds of policies before you decide that you're willing to go to a custodian. Are can you take that risk? Do you
Yeah.
like their control policies? Do they have, for example, a SOC report, right? Maybe you
Yeah.
want a SOC 2 type 2 report from them, for
Yeah.
example, to show that their controls were operating at all times throughout the year
Mm-hmm.
versus a point in time.
Mm-hmm.
So there's all kinds of considerations like that. And frankly, a lot of people might want to get on board and be like, I don't want to figure out this hot, cold walled stuff. Like,
Yeah.
I'm just going to go, send it over to a custodian. Cool news for Canada, actually. We got our first qualified custodian 2 days ago with
Mm-hmm.
Olympia Trust in Knox.
Yeah.
So why I say that, besides it's awesome for Canada, is you have to think of your geography, where, even though it's borderless, do you want the laws of, for example, the US to be applying to your deposits and your Bitcoin, or do you want the
Mm-hmm.
laws of your country applying to it
Yeah.
as well?
For sure.
So you have to
Yeah.
think of things like geopolitical risk, data residency, like there's all kinds of considerations that start to come into play. So
Yeah.
again, it's not as much as it's just like, hey, I'm going to open up a CoinSquare wallet or whatever, and I'm just going to start accepting coins.
Mm-hmm.
You got to ask yourself all these other questions around it.
Yeah. Because you're eventually going to face those challenges,
Yep.
and then you're going to ask the question. You're going to ask yourself the questions that once the damage is done, it's going to be
Exactly.
probably too late.
And unfortunately,
But
that's what tends to happen is people,
because yeah, you'll never realize that these questions are things you should ask until you face the challenges that
yeah. And
that
I don't know about you, but you might get fired if you
yeah,
lose the keys to the wallet.
of
Because
course,
it's not like you can just go to the bank and prove, hey, this is me, this is my ID, our company owns this deposit box. Like, sorry, we lost the keys.
yeah,
Oopsies. There's
yeah,
nothing like that for your
of
crypto
course,
wallet. So, like, there's a higher degree of risk. And again, people need to understand those kinds of intricacies, or bad things happen. And let's say you lost a Bitcoin wallet from even 2 years ago. What if it only had one Bitcoin in it? You'd still be in
hmm
trouble because it went up
yeah,
so much, right? Like,
definitely, and that's when you need to decide, I guess, as a company, whether you want to do this on your own internally or whether you want to hire a custodian or set up an account on those regulated platforms that will allow you to have a more convenient experience, yet not fully in your control, which was the purpose of Bitcoin and blockchain,
yep,
for everyone to be their own bank, right?
yep,
But that comes with risks, and that comes with the more power you have, the more responsibility you need to take on, and that comes
100%.
with a lot of more responsibility than to just placing your money at a bank or your Bitcoin at a regulated exchange.
And if
And
we
once
just
you,
take if we, just one
yeah,
thought before we move on, with any technology, new or old, the question is always, why do I want it? Are the conveniences worth the risks or not? And can I do this
mhm,
in another way that's easier, faster, cheaper, and serves my purpose?
Yeah.
So again, it's no matter what the technology is, you've got to, so people like, obviously I love crypto, I love digital assets, I love blockchain, I'm fully invested, but you
Mhm.
have to take your personal association out of it if you're going to be making a decision for your business,
Yeah.
right? Like people want to jump on board because it's cool, and obviously it is, but does it fit with your strategy? And then ask yourself if it's the right move.
Yeah. Yeah. And in most cases, large corporations, they have the wherewithal, they have the capacity to hire, firms like Deloitte, large, accountants, lawyers, qualified personnel. But when you're talking about entrepreneurs who are just starting a crypto business, it's a tougher, or a much more challenging place to be when you're an entrepreneur starting your own business in the cryptocurrency or blockchain space, because these things are going to come at a significant cost, and these mistakes, will help you learn a lot. But eventually, it's tough for most young entrepreneurs to come back up after, losing their private keys, for example, where
Yep.
they've had stored a bunch of Bitcoin or cryptocurrency, or if they started an exchange and all of a sudden that exchange is successful, and the CEO, unfortunately, something happens to him and dies, or like the recent Turkey
Yeah.
issue that, the CEO just disappeared. These things happen, and it's those young entrepreneurs that need that education, I think. And that's why I want to get into the segment of what should be considered when it comes to, everybody that I've been speaking to within the space, that is of the younger generation than I am, are looking at it with curiosity, and they are looking at it with a vision and a different perspective, and they have these ambitions to start something within the space, but they need, to go through a significant learning curve before they're able to succeed into
Yep.
that sector. What are the regulation or regulatory concerns that these young entrepreneurs should consider? Because as an entrepreneur at 19, 20, 21, I wasn't concerned with regulations, right? I just wanted to do something cool.
Yeah.
And you're going to start an application and you're going to do something crazy, and you're going to find yourself, being sued or
Yep.
getting letters from the government about certain things that you're doing that are not right. So these are the things I'd like to educate people about, is regulations, and how either to comply with regulations or do things in a way that, makes you understand what is a regulated activity and what is not a regulated activity within the cryptocurrency sector, because it's
Right.
confusing, right? You have the
Yep.
utility, you have the security, and then you have a token, and it depends how you market it, how you sell it, how it is perceived. So all these things come into play that, an entrepreneur may not consider when he just has an amazing idea that he wants to execute on.
For sure. And I think it's hard because you learn so much more of the stuff to look for as you proceed in life, and you've had, more experiences and got burned, or, seen someone else get burned. But again, if people step back from being focused on it's crypto or it's Bitcoin or it's any other technology, and you just say, what is the allegory to what I'm doing in today's existing world, and who might regulate that? So securities. I don't think there's a single ICO that wasn't a security. And honestly, for the simple reason, you've created a promise to pay.
Yeah.
So even if we don't get into the details of why your coin should be or shouldn't be, if you're worried about the answer to that little tiny sentence,
Yeah.
proceed very carefully, because the regulators, to be fair, their job is to move slower, and their job is to protect the consumer. But then they have to balance that with fostering innovation. So the lens that regulators generally tend to come from is what's happening today, what is tried and true, and what's been through many, many years and consultations and is working, let's say, well, or at least as well as it can be for the population. that's the point of view they're going to come from. And when I'm even when I'm teaching people stuff, I try and